Well, thank you so much for joining us here on a Wednesday. I'm Marlon Bowling with you on the Market Day Report, and we are going to take a look at your ag commodity trade as we are now in the center of the trading week, the final trading week of April. My goodness, I was talking on the radio show a little bit ago on our Commodity Wrap program. That's on Sirius XM channel 147, our rural radio side, and we were talking about the fact by the time we get to the end of this week, you know, this year is already a third over with. Kind of hard to believe. Here to talk about the markets as we get into the midweek section here, we have Rich Nelson on the line. Let's go talk with him right now. Of course, Rich happens to be with Allendale Incorporated in McHenry, Illinois. And Rich, I understand it's going to get a little nippy up in that part of the country there.
Definitely got, in addition to this good rain, we got, of course, a system of cooler temps on the way here for most of the Midwest. And that may cause a slight amount of problems, but for the most part, today's trade will be a little bit lower on these grains. As we do point out, there has been a slightly reduced forecast as far as the intensity of these rains. So bottom line here, we are going to have maybe a slight problem here, but not as bad, at least, as what we thought just yesterday.
Overnight in the Globex trade, we can take a look at the corn and soybean markets. It looks like a little bit of weakness crept back in again in that Globex trade. On the corn market, it looks like we have the May with the last trade about a penny lower at 364. That was on the low of the overnight range, by the way. In December, down a half at 388.5. Meanwhile, on the soybean side, overnight we had the May contract down 2 1/4 at 952 1/4, and we also had November down 3 1/4 at 958.5. So what's going on with this grain market activity here as it sets up for today?
You know, I think in addition to this slightly reduced rain forecast, we can also look at some other outside market issues here. For instance, crude oil, which was just $53 per barrel a few days ago, now we're down to $49 here. And this kind of sets us up for this EIA report every Wednesday morning at 9:30 Central. The Energy Information Administration releases weekly crude oil stock numbers. The trade is hoping for a 1.7 million barrel drop in crude oil stocks, and that might be some to add maybe a little support here if it happens. What we're actually watching for is part of the EIA release. There's also the weekly ethanol production numbers. And in terms of our focus, if this number hits 5% over last year, which is where we've been at, we're waiting for a 973,000 barrel per day estimate from the EIA for energy production or ethanol production this morning.
All right, so we'll have those numbers when they come out a little later on today. What else is going to be pulling on the markets? Because I see the wheat market a little higher overnight. On the Chicago and Kansas City markets, we can take a quick peek here. And on the Globex trade, we had July new crop Chicago wheat a penny higher at 428. If we flip over to the Kansas City side, we had the July new crop a penny and a quarter higher at 426. And as I got up this morning, you know, my old stomping grounds in Nebraska, I actually got a weather alert that they had frost advisories out there in southern Nebraska. So what's going on here with the wheat? Is it really at risk or not?
You know, for the most part, we almost have to assume that these type of short-term concerns are especially on wheat, maybe not a big picture problem here for us here. But in addition to the weather concern, a little bit as far as the cooling temp side of things here, we can also point out there is some interest on the export side. For instance, South Korea bought a good share of feed wheat overnight, 135,000 tons, and that's of course going to be optional origin. In addition, Tunisia, not a big buyer here as far as from the United States, but they also bought a cargo of wheat overnight as well.
Well, Rich, I'll bring you back, and we'll talk a little more about the markets here in just a little bit. Rich Nelson is with Allendale Incorporated in McHenry, Illinois, and we'll be back talking livestock trade when we come back after this. We're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. Time to talk a little livestock market action. And there was no cash cattle market activity yesterday. I see where it looked like on the beef cutout values that were announced by USDA yesterday afternoon. Seemed like we had a little firmer tone once again in the choice cuts. Here's a look. We had them going up 34 cents on the choice at $219.01. Selects up $1.98 as they narrowed up that spread by over $1.50 yesterday. 206.27 was their last value per hundredweight there. But it seems like this is kind of typical now, isn't it, as the market kind of sits on its hands to wait and see what that Fed cattle exchange results in Wednesday morning, and that's going to be coming up here in just a couple hours.
That's exactly right. Now, as far as this Fed cattle exchange, a few more numbers being offered this time around: 5,448,000 head. Good to see. Now, as far as last week's trade on the Fed cattle exchange, there were no Nebraska numbers moved, but they did have some Central and Southern Plains cattle. 431 head moved last week at an average price of $129. So we have a few more cattle offered this week. On the other hand, like you mentioned, we still have some stronger beef, and bulls are still in control of this market here. So if nothing else, we might trade steady. But let's see what this brings us at 10 o'clock here.
Rich, I believe that we had talked for about 3 weeks now that the Packers were able to draw on their contracted cattle that they had, formula cattle. Some people refer to it that way, but that has probably kind of run its course by now, hasn't it? I would think they'd be getting it about at the end of that.
I think so, and especially with what we kind of learned last Thursday with that weight data, yet another tightening of the weights here and bringing numbers down quite a bit. You know, these weights are 2.4% under last year. I think that kind of told the trade that, yes, though there is this contracted cattle issue that Packers can draw from and have been, that it's still not able to overcome the simple fact that these feedlots are still very, very current for the most part.
So is that something that you normally see this time of year, that big of a drop in the cattle carcass weight, or not?
You know, we do, of course, have a drop. This always happens, and we can expect weights to drop all the way into next month as well on a seasonal basis. But this decline, the size of the decline this time around, is really what has tipped the trade-off to the fact that we have some pretty darn tight feedlot offerings right now.
Well, on the lean hog side, of course, we had a big rally yesterday. That's a couple of days in a row now of rally been seen in the lean hog futures. But boy, it was a big day yesterday. About 3 different months were over $2 higher. And a lot of analysts are starting to say, well, that proves to them anyway, in their mind, that maybe the long-term low is in the rearview mirror now. What do you think about that?
I think that's exactly the case here as far as the trades discussion point, and I think that's also our viewpoint as well. You know, we've talked about this seasonal change in offerings up ahead in the next few weeks, as well as the stronger demand that happens on a seasonal basis with a great weather in a great weather month of May and early June. So we're looking at lower supplies up ahead and stronger demand, and looks like now with 3 days in a row of cash hogs actually posting mild gains. I can certainly agree with this trade sentiment right now.
Well, with the drop in the dollar this week, is that going to be helpful to the livestock exports, do you think? And when would that show up, if it does help?
You know, it certainly has helped us and will continue to help us. And you know, keep in mind this export market, even before this drop in the dollar, was for the most part pretty strong. I believe the export numbers on a year-to-date basis about 18% over last year. So very good exports, and this lower dollar would do nothing but help that situation as well.
All right, it looks like on the cash hog trade around the country yesterday, a little bit higher. Looks like 22 cents higher on a carcass basis. Live basis hogs about 32 cents higher on average yesterday. Do you look for more of that maybe in the next day or two then?
I think that's exactly the case we expect. Mild gains here this week, and then once we see the lower slaughter numbers show up here, and in addition to this stronger demand, which we expect to show up, we should see some higher gains here, even more next week here.
Rich, excellent information. Covered a lot of ground this morning, and I appreciate all the help. Rich Nelson of Allendale Incorporated in McHenry, Illinois. So we're getting the stage set. Futures open up at the bottom of the hour.
All right. I think there's a lot of anticipation for this morning's open as well.
Especially on the hog side. They're wondering if they'll follow through.
Okay. Thank you, Marlon. Looking forward to that open.